So
So
somebody that's 60 years old looking at 500K and their goal is to generate retirement income. The first thing we could look at is a MYGA. Now, a MYGA stands for a multi-year guaranteed annuity, and it's more equivalent to a bank CD, with the difference being that it's offered by an insurance company, and it normally has a surrender schedule where there are some penalties if you were to exit that contract early. But what you can understand about MYGAs is that they're generally going to offer higher or more competitive fixed rates of return than the same equivalent bank CD of the same tenure. So when someone looks at a MYGA, generally these people are looking to grow their money safely. They're looking to not take any risk with it. And that's where a MYGA is very strong because it offers that guaranteed fixed rate of return each year for the duration of the contract. And in addition to that, it offers a guarantee of principal protection. There's no downside risk to the markets. It's not invested in the markets at all. So overall, I think it's a sound strategy if you're just looking for income for a short period of time. And maybe you're trying to bridge the gap between, when you retire and when Social Security can turn on. Now, the cons here in doing this is that, the income is not guaranteed for life. Most people can't sustain their life on Social Security alone. So we still know that you're going to need additional income streams to bridge the gap between your essential expenses and the money coming in from Social Security. So the problem with using a MYGA in this scenario is you're still at risk to the inflationary interest rate environment. So in this case, you might, for the first 10 years, get a really good rate. But if you're in a low interest rate environment or an ultra low interest rate environment after the first 10 years, and you try to do that strategy again, you're in a situation where you're not going to get as high of an interest rate, and that's going to work against you. There's no lifetime guarantee on those. I think the MYGA strategy is ideal for someone looking for short-term income. But if it's really trying to address your retirement income, which is a long-term play, I think a MYGA does not really work well in that scenario unless you have other plans for future income streams.
yeah, I mean, as we've referenced before with the MYGA, its primary intent is safe market growth. We got some flexibility within it and using its tools, but its primary purpose is that safe market growth.